Here's something to think about. How do we know who's really shaping the digital world? One way is to look at where people spend most of their time online. If you check the list of the 20 most visited websites in the world, you'll see that almost all of them are American, except for Yandex from Russia and Naver from South Korea. What's surprising is that there isn't a single European company on that list. Yet these digital platforms are part of daily life. You probably use Google to search for information, Google Maps to find directions, FaceTime or WhatsApp to message friends, and apps like Instagram or TikTok to pass time while waiting for your Amazon package. Almost everything we interact with online was built outside of Europe. It's surprising, but when you think about it, how many big European tech companies can you name off the top of your head? Probably not many. But it didn't used to be like this. Europe was once a leader in tech. Before Silicon Valley, before people like Mark Zuckerberg and Jeff Bezos, there were big European companies like Nokia, Siemens, and Ericsson. Even more, legendary inventors like Alan Turing, Konrad Zuse, and Tim Berners-Lee helped to build the foundation of modern computing and the internet itself. But now things have shifted. Europe, once a key player, no longer leads in global tech. This isn't just about one country. Europe has 27 nations and about 450 million people. It's home to some of the best universities in the world and has a deep history of scientific breakthroughs. Despite this, Europe hasn't produced global tech giants on the same level as Apple, Google, Microsoft, or Tencent. That raises a big question. How did a continent that was so important in shaping the modern world fall behind in the digital space? Of course, that doesn't mean Europe is doing nothing. The European Union still plays a big role in shaping the tech world, just in a different way. To understand this better, let's take a closer look at Europe's current situation and what's really going on behind the scenes. Europe is often seen as a place where life is good. If you look at measures like industrial power, education, and quality of life, Europe performs well. Its industries, especially in automotive, aerospace, and rail, are still among the best. Companies like BMW, Mercedes, Volkswagen, and Airbus are recognized worldwide. Europe also leads in renewable energy, with nearly a quarter of its electricity coming from clean sources. Denmark, for example, is a top performer in green energy. On top of that, European cities often rank high for livability, with efficient public transport and universal healthcare. Universities like Oxford, Cambridge, ETH Zurich, and Sorbonne produce top talent year after year. However, many of Europe's brightest minds move to the United States, where there's more funding and a stronger startup culture. This has caused a brain drain, where top scientists and engineers leave Europe to build their futures elsewhere. Still, Europe invests heavily in research and development. In 2023 alone, EU countries spent over 380 billion euros on R&D. Major science projects like CERN and ITER, which focus on particle physics and nuclear fusion, show that Europe is serious about pushing scientific boundaries. Even though Europe has everything it needs to succeed, money, talent, and infrastructure, it still struggles to build major consumer tech companies. Yes, there are successes like Spotify and SAP, and ASML in the Netherlands makes machines that are critical for producing microchips. But these companies are not as widely known as Apple or Google. Spotify is popular but struggles to be very profitable. SAP is huge but focuses on business software, not consumer products. ASML is essential for the tech world, but regular people don't interact with it directly. The tech giants from the US like Apple, Google, Microsoft, Meta, and Amazon are in a league of their own. By 2024, 7 of these US companies had a combined market value of $13 trillion. In contrast, the top 11 tech companies in Europe were worth only $2.2 trillion. That's a huge gap. To put it in perspective, the $13 trillion value of those US companies is almost the same as the combined economies of Germany, the UK, France, and Italy. That's pretty shocking. But it's not just the US that Europe has to think about. Asian countries like Japan, South Korea, and China have built tech giants too. Japan gave the world Sony, Nintendo, and Panasonic. South Korea has Samsung and LG. China, in just a few decades, created companies like Tencent, Alibaba, Huawei, and ByteDance. When you compare that to Europe, the difference is clear. Europe has the talent and resources, but it hasn't turned them into famous global consumer tech brands. One major reason is that many European entrepreneurs move to the US to start their companies. It's much easier to raise money there. In Europe, raising funds can be slow and difficult, and each country has its own set of rules. Europe may be a political and economic union, but it's not as unified as the US. Startups have to deal with 27 different regulatory systems, 24 official languages, and a mix of tax and labor laws. This makes it much harder to grow quickly. A good example is Uber. It launched in Paris in 2011, but faced huge challenges expanding across Europe. Some countries banned the app entirely, and others placed heavy restrictions. Protests broke out, and the courts allowed countries to keep banning the app. There's a common saying, America innovates and the EU regulates. While regulation isn't a bad thing, Europe's GDPR set global standards for data privacy. It also raises costs and makes it tough for new startups to compete. Venture capitalists in Europe are usually more cautious and prefer safer investments, like business software or health tech. This is why Europe's strongest tech companies like SAP and ASML are business-focused rather than consumer brands. Even though Europe missed out on the first wave of digital innovation, it's making moves now. The European Chips Act is a €43 billion effort to boost chip production. The Digital Markets Act is targeting big tech companies to create fairer competition, and countries like Estonia and France are leading in digital government and health tech. Europe may not have built the world's biggest tech platforms, but it is shaping the rules everyone has to follow. The question is, in a world driven by technology, can Europe keep influencing from the sidelines, or will it step up and start building the future itself? Thanks for watching InvestingFlix. If you found this video helpful, don't forget to like, share, and drop a comment below. For more expert insights on personal finance, investing, and wealth building, hit that subscribe button and turn on notifications so you never miss out.